In today's video, I want to talk about why a lot of people have been saying that Tesla has a huge demand problem, and then I want to look at some charts that completely disprove them. But first, I want to say thank you because a lot of you have been hitting the like button a lot in my videos recently, and it's been helping the channel grow at a very fast rate. So thank you, it means a lot to me. Let's get started. What's up everybody, my name is Ale and welcome to my world of stocks. So going back to Tesla, it's been many months now that I've had to listen to Tesla short sellers and bears say that there is little to no demand for Tesla vehicles right now, and even the mass media has been completely biased in many of their reports. In fact, here's just a few headlines. This one says Tesla has a demand problem. This one from the LA Times says that there's red flags over demand for the Model 3. This one says that Europe demand problems offer a stark warning. Forbes adds China to the mix and says Tesla has a demand problem. And of course, you had analysts giving ridiculous price targets for the stock of as little as $36, $10, and even lower than that. And while we're looking at headlines from CNBC, I might as well show you one of my favorite headlines that says Tesla dream is dead, investors face Tesla reality, and of course it's from their Trading Nation show where a bunch of short-term traders try to give real investors advice. Now to be fair, you could definitely argue that I myself am biased because I am a Tesla bull and a shareholder as well. But I don't think I'm anywhere near as bad as the mass media because I've admitted to you guys many times that I think Tesla is a very speculative stock because they've struggled to remain sustainably profitable. But when looking at the mass media, they go completely to the bear side of the spectrum and they really don't report with a lot of rationality or reasoning or even objectivity. Now in a previous video, I already covered why I think everyone has been attacking Tesla, and I'll have it linked for you down below in case you want to check it out. But in that video, I explained how Tesla short sellers have literally lost billions of dollars with a B, billions of dollars in the last few years, and are now trying to make as much of it back as they can this year in what is, in my opinion, what looks pretty close to being a coordinated effort to damage Tesla's reputation by saying that they have huge demand issues and apparently nobody wants their vehicles anymore. So what is their ammunition for this argument? Well, they usually point to the fact that Tesla reported much weaker delivery numbers in Q1 versus Q4. In fact, they dropped from 91,000 deliveries to just 63,000 last quarter. And despite that 91,000 being a new record high, bears in the mass media use the argument that they still missed expectations by 2,000 deliveries as a sign of weak demand, which sent the stock tumbling down despite the record-breaking deliveries. In fact, here's a report from CNBC saying that Tesla missed analyst expectations, and when you scroll down in the report, you see that they list Tesla's deliveries at 90,700, which they claim fell short of expectations by exactly 2,000 deliveries. Not rounded, not approximately, they give a specific number of 2,000. Okay, well if they missed by exactly 2,000, then the expectations must have been 92,700, right? Wrong. Scroll down even further to almost the bottom of the report and you can see that they finally mentioned that the expectations were actually 92,000, just 92,000. Even if you rounded their miss of 1.3 thousand, which is what they actually missed, it would still be much closer to 1,000 than to 2,000, but they like to push their anti-agenda or anti-Tesla agenda and just round way up to 2,000 because it looks more dramatic. And again, the stock dropped by around 10% that day just because they missed by 1.3 thousand, even though it was a record-breaking quarter. But hey, at least they're gracious enough to admit that deliveries increased by 8% quarter over quarter in what is an extremely seasonal market where quarter over quarter numbers mean absolutely nothing. As you can see on this chart here, that US auto sales always skyrocket in the second half of the year before falling off a cliff. So what really matters is year over year numbers, but of course CNBC didn't bother to give that percentage anywhere in this report, because if they had, all their viewers would have seen that Tesla's deliveries had actually increased by over 200% year over year. But hey, that doesn't seem like important enough information, right? Let's just stick with the 8% and leave the 200% completely out. No bias at all, just objective reporting starting right here. In any case, the real issue was the drop off in Q1, right? So when looking at that, once again, Tesla bears, short sellers, and the mass media focused on quarter over quarter numbers in what is seasonally the worst time of the year. But to be fair, it was in fact a very large drop off in deliveries, coming in at 31% lower, but again, that's quarter over quarter. But here's where we need to switch gears and take a look at a few charts that prove that not only was their past performance nowhere near as catastrophic as the mass media and all the short sellers made it seem, but new evidence is actually showing that Tesla demand is not only alive and well, but it's actually extremely healthy. And so let's take a look at some of those charts right now. Okay, for starters, let's add year over year figures to that most recent quarter, since the market is so heavily seasonal, and right away we can see that their deliveries actually increased by over 100% year over year. But good luck finding any mass media outlet that is even willing to mention this. And if we look at year over year figures for each of the last 4 quarters, we can see that they've really been on fire in each of them, but apparently growth of over 100% translates to no demand in bizarro world where the mass media lives. And if we expand on these deliveries into greater context, we can see that a report from CleanTechnica shows just how incredible Tesla's growth has been in the past 7 years. Each of these lines demonstrates a year of deliveries separated by quarters, and you can see that the last 2 quarters of last year were insanely higher than all previous years, making it an extremely hard act to follow. Yet their first quarter of this year, that is shown as a red dot there, was still insanely higher than all previous years in the first quarter. So again, I asked the question, how does this insane growth translate to a demand problem? If you're still not convinced, Tesla recently had their Investors Day, during which they presented a number of alarming facts. In the past 4 quarters, the Tesla Model 3 has been the best-selling car by revenue in the United States. That's not just hybrids, that's not even just EVs, that is literally all the cars including Corollas, Civics, Accords, and even Camrys, yet Tesla still came out on top at number 1. And if you think that's nasty, compare the Model 3 to its actual competitors, and it didn't just outsell each one of them, but it actually outsold all of them combined. If you stack up each of their competitors, lump them together, the Model 3 still comes out on top. Now, bears might try to make the argument that you have to give the competitors more time, and maybe that's fair, but all the meanwhile, Tesla is surpassing everyone on technology. Every single one of their vehicles is more energy efficient than all of their competitors, and in some cases, it's by nearly double the amount. Their range has also not been matched since 2012. That's around 7 years of dominance and incredible performance that continues to get even better. And speaking a little more to their dominance, their Gigafactory 1 is still producing more EV batteries than the entire world excluding China. That's one single company and one single factory doing more than all of those countries combined. And we've already heard other vehicle manufacturers say that they had to restrain production because of lower battery supply. Here's a report from CleanTechnica that talks about car makers not being able to meet demand, and it lists big companies like GM, Renault, Hyundai, Daimler, BMW, and VW as all having issues due to battery shortages. And this is just the beginning. Tesla is already building another Gigafactory out in China that will produce 150,000 Model 3s per year to start, and they plan to build yet another Gigafactory out in Europe, which, by the way, both of these will help immensely with not only trade tariffs being thrown around, but it'll also lower prices in those regions to drive up higher demand, and it'll also take away many of the logistical issues that they had in Q1 from delivering the Model 3 out to Europe and China, which was a huge reason why deliveries were down, yet all the analysts just kept spewing out the same lies about there not being any demand for their vehicles. Because of which, Tesla made it a primary focus of their presentation to address that supposed issue head on by noting that during this latest second quarter that we're currently in right now, orders have been outpacing production for every single one of their vehicles, with about 90% of those orders coming from non-reservation holders, meaning that these aren't just people who were excited about the Model 3 launch, but these are also pretty much new customers who just, you guessed it, demand the product because if there's a good product, it's going to have high demand. And Elon Musk went even further to note that this could potentially be a record-breaking quarter, which even if it's the same as the record quarter of Q4 of last year, that would still be an increase of around over 40% quarter over quarter and over 120% year over year. So those would be huge numbers that they could potentially be putting out. In fact, the demand is so strong that the majority of their trade-ins are from non-premium vehicles, meaning that people who don't normally buy premium vehicles, which is exactly what Teslas are still upgrading to Teslas because they want them so badly. And it helps that the total cost of ownership is comparable to a Toyota Camry, so there's not a lot of reasons why they shouldn't. And it's not a stretch to think that demand could continue into the future, given that the Model Y hasn't even been released yet, and that's targeting a market that is 2.5 times bigger than the Model 3, which again is already the best-selling car by revenue. So at the end of the day, the short sellers, the bears, and the mass media, they can say whatever they want, and they're entitled to their opinions, but the facts are the facts, and that is that there has not been a demand problem in the past, there isn't one right now, and there probably won't be one in the near future, at least in my opinion. So for now, this is a stock that I will continue to hold for the long term, the next 5 to 10 years, even longer. If they become sustainably profitable, then that will turn into an actual big investment for me. And if not, then it's a spec play that I will continue to adjust to and see where it goes. And if anything goes south with the company or the stock, I will make updated videos. I'll own up to it, and we can talk about it. But anyway, that's kind of how I feel about Tesla. That's how I feel about these whole demand problems that are being spewed out all over the place. And anyway, I hope you guys enjoyed the video. Leave your thoughts and comments down below. I'd love to read them. And thank you so much for watching. I'll catch you guys in the next one. Take care. Bye-bye.